Well, guys, theme park news has been mostly bleak these past few months. It's a market that has been hurt harder than most others during these times. Universal, Cedar Fair, SeaWorld, Six Flags, they're all reporting unprecedented, enormous losses across their theme park divisions. Good reason. I mean, parks are closed, so naturally that is to be expected. It's still shocking to hear. So naturally, many of us were waiting with bated breath to find out how well or how poorly Disney weathered these times during this week's Q3 earnings call for Disney. Now, this call is primarily for investors to let them know how Disney is performing. So much of the discussion is financial in nature. And that actually is probably more interesting to the common fan today than it might otherwise be. But in these calls, it is often the case that we also get some other interesting bits of information, some news announcements that are worth noting. So naturally, let's take a look at some of the highlights of the call and then provide a little commentary. And we'll start with the basics. Disney lost a ton of dough in the past quarter, and that was to be expected. But it appears that things may not be quite as dire as we thought they might be, especially when you consider some of the other announcements that we've heard from other theme parks. As a company, Disney earned $11.8 billion in Q3, which is down 42% year over year. This is bad, but it does beat Wall Street expectations. As for the parks, they earned a little over $1 billion, which sounds like a lot, but this is down 85% year over year. But if you've been following, like I mentioned, other theme park announcements, that's actually not bad. Universal reported 94%, OLC was 95%. I heard Cedar Fair was somewhere in the 95% range, so 85% or 84%. It's not great, but at least we're ahead. Now, so far, nothing too noteworthy until we get to this bit of information provided by Christine McCarthy, who is Disney's chief financial officer. When asked about Disney World specifically and how it was performing since it's been open, McCarthy said that Disney World was showing a net positive contribution. In other words, right now, at its current attendance levels, Disney World is showing a profit. Now, I don't know about you, but I found that to be kind of shocking, almost unbelievable. I can't imagine what kind of math is needed for them to show a profit when they're operating at what appears to be 10% or even less capacity. If they're net positive at these current levels of attendance, they must be making obscene amounts of money at even something like 50 or 60% capacity. Or maybe they are. But I think it's more likely that they probably found some other creative way to, I don't know, make those numbers look a little bit more optimistic than they might otherwise be. And some are suggesting this is due to the agreements they have with the NBA and MLS to host their sporting events at the Disney World Resort. You may recall a while back, Chapek had said before the parks reopened that they were not going to reopen unless they could show a positive net contribution, unless they could show a profit. But Chapek also said during this earnings call that attendance was lower than they had expected. He said that in the weeks leading up to them reopening, that the reservation system was showing ample demand for them to open the park and to experience a profit. That was right up until the state of Florida, right as Disney World was trying to open, the state of Florida showed a dramatic increase in the number of cases, new cases. So this naturally results in, lower than expected attendance, and to my eyes, significantly lower than expected attendance. I don't think that they expected 6 to 10%. So if that's the case, then one of two things must be true. Either their initial guidance included a very wide margin of error, say, for example, that anywhere between 10 and 25% capacity could result in a profit, or the revenue being reported as being net positive includes something like the NBA or MLS agreements. And I don't make this point as if to suggest that they're somehow, trying to polish the numbers a little bit. It's just, for me, what I want to know as a theme park fan or as an investor perhaps, what I want to know is how are the parks doing? Because they can't count on the NBA or the MLS to be a regular, revenue generating thing. What generates revenue in the parks is attendance in the parks and attendance, reservations, bookings at the resorts. So that's what I want to know. How are the resorts and the parks doing individually? So Chapek goes on to say that the less than expected attendance was due to less than expected interstate travel, people coming in to spend a week or so at the resort. And I mean, yeah, that makes total sense. That's something that we've been saying for a long time. You go look at the parks, the people who are showing up are locals and annual pass holders. Chapek said that attendance today is right now a 50-50 mix of travelers and locals and APs. And actually, I felt like maybe the 50% number was higher. I was expecting a majority of the guests to be locals or APs, given the conditions, which is unusual, highly unusual for Disney World, which has long been known or understood to be a destination, a vacation destination for people coming in from out of town, in contrast to what Disneyland being a locals park. There still are interstate travelers and people coming in for a vacation, but for a larger percentage of the guests at Disneyland are annual pass holders or locals. Chapek also confirmed that they have been trying to offset the lower than expected traveling guests with more locals, more APs, doing that through the reservation system and giving more of those spots available to annual pass holders, and also, as it turns out, to cast members. They're opening up the park to cast members now where they were previously not allowed in. And he said that in doing so, they had achieved something of an equilibrium, which, again, I find that kind of interesting. That's to suggest that the numbers that they're seeing in the parks today are expected. Is this where they're supposed to be? If they've achieved an equilibrium, well, I don't know. That's a hard thing for me to reconcile. I still have to believe that what we're seeing in the parks today is less at Walt Disney World, is less than they were anticipating. Okay, and then one final comment that caught my attention from Chapek, as I'm sure others who listened in or who follow found interesting as well. Chapek tossed in at the very end of the call that guests who are visiting or vacationing for, let's say, 5 to 7 days are marginally more valuable than those guests who are staying for 1 or 2 days, locals and APs. Now, naturally, some have seized upon that statement to suggest that those guests, those staying for 5 to 7 business days, are more valuable, more profitable, better business than APs, and would likely use this as support for the argument that Disney should rid themselves of annual pass holders. But it should be noted that he mentioned this only in terms of the conversation, within the context of the conversation, that spending per capita, per person, the expectations need to change because they do spend a little bit more than the day-to-day guest would. In fact, McCarthy had said earlier in the call that per capitas, how much each guest is spending, were very strong. And we have to remember that those guests who were in the park, much of them, half of them at least, are annual pass holders. So what they're saying here is that actually annual pass holders may be spending at least as much or more than they would have expected to normally. Also, and perhaps this is just me paying close attention to the words being used, I'm a bit of a semantics nerd when it comes to that, but the term he did use was marginally, which within the context of this kind of conversation means just barely, only by a little. Marginally is not meant to think that there is some sort of preponderance of evidence one way or the other. Take that for what it's worth. I don't know why. This is an argument. This is a conversation that I like to jump into frequently in defense of annual pass holders, because people tend to use APs as the fall guy for just about everything that's wrong with attendance at Disney parks, when I think it's the exact opposite. I feel like Disney relies on annual pass holders because of the often quoted reasons that it's a guaranteed income, it's predictable income. As a matter of fact, I think that Disney would prefer to sell more APs if they could. Okay, enough of that bandwagon talk. Let's get into the other main piece of information to come out of this earnings call, and that was with the release of Mulan and Disney Plus. Chapek announced that Mulan was going to premiere on Disney Plus on September 4th, but not as part of the regular lineup of films available. It will be part of a premium component of the device and being sold for $29.99. And yes, that $29.99 is on top of the monthly service fee that you're already paying. Now, the opinions on this announcement are spread across a very wide spectrum. Some have found it to be borderline offensive, while others view this as an exceptionally good value. And where you land will generally depend on your family status. If you're single, let's say, that $29.99 doesn't look so hot. But if you're, a family with a couple of kids, it looks very affordable. And really the key question that's going to be asked for anybody who disagrees with this is, why am I paying $29.99 and also paying a monthly service fee? Why am I being asked to pay a premium fee for a movie that's going to show up on that same platform at no extra charge in just a few months? Alternatively, why am I being asked to pay $29.99 when a traditional movie theater ticket is somewhere in the $10 to $15 range depending on where you live, or more, depending on how bougie your theater is? Good questions all. Better answers, though, to follow if you just begin with the understanding that you need to treat this offering on Disney Plus as if you were going to a traditional movie theater. And we go to the movies not just for the movie theater experience, although that is obviously a large part of it, and that is what you're paying for, but also so that you can see it way before anybody else can. It's your first best opportunity to see a film that might be in demand. If you are a Disney Plus subscriber, and it was your plan to also see the film in theaters when it came out, then this offering shouldn't impact your wallet any differently. Understandably, of course, that the experience that you're having at home, while significantly better today than it was even a few years ago, is still not the same as going to a movie theater. But since there are no movie theaters open right now showing first-run movies, this is the next best thing. That's $30 for you and anybody else that's in your living room at the same time to see the film 3 months ahead of its release on Disney Plus. Meanwhile, if you were planning to take, let's say, your wife and 2 kids, now you've saved money. It's actually a pretty good deal. As for that price, $30 versus, let's say, $15 for a traditional, movie theater ticket, that really boils down to Disney trying to find a median price range that covers all demographics. $30 is obviously too much for just one person to pay. Well, more than you would expect. But then at the same time, $15 is way too little for a family of 4. You need to charge more for that. And they can't charge it per person. They just can't do that with pay-per-view or with video on demand. And when you consider that this film probably cost somewhere in the neighborhood of $300 million, well, I mean, who can argue with them trying to recover some of that expense? Trying to create revenue where there is none, pretty much, for Disney to earn in this time right now. Now, Chapek has said that this offering is a one-off. He said exactly that. Somebody asked that specific question. He gave that specific answer. Mulan is not a one-off. But, I mean, does anybody really believe that? Then, of course, you can listen to this comment from Chapek and know that this is no one-off. Per Chapek, we find it very interesting to be able to take a new offering, our Premier Access offering. The Premier Access offering being the paid video on demand feature that's being added on top of the Disney Plus service. To consumers at that $29.99 price and learn from it and see what happens, not only in terms of the uptake and the number of subscribers on the platform, but the actual numbers of transactions on the Disney Plus platform that we get on that PVOD offering. And this aligns with another comment that Chapek had made about how Disney plans to grow Disney Plus, and that is with new content. New content creates new subscribers, and then the depth of the library, the depth of the catalog, is what keeps people subscribed on a monthly basis. The latter is why they purchased the Fox library of films and television shows. The former is why they create shows like The Mandalorian. So premiering Mulan in this way has the potential of earning revenue in the same way they would if they had put it in theaters, but also helps to create new subscribers to the Disney Plus platform. In other words, I'm of the opinion that $30 for Mulan is genius. especially, or at least, for blockbuster type films like Mulan or Black Widow. They're already into Mulan for $300 million, and to just put it directly onto Disney Plus at no additional charge is just a financial mistake. It's financial suicide. Now, things may change in the future depending on how quickly studios are able to start ramping up production on films, or this may become the future if it is found to be a more viable option than putting it into movie theaters traditionally. Hence the comment from Chapek saying, it's going to be very interesting to observe how we react to this offer. So there's that, and we'll conclude this video with a couple other observations that I made while listening to the call. There was no mention of layoffs, not even something that might be considered code for layoffs. Something like saying that, labor is a significant part of our expenses and that they will be adjusted, as needed. That's code for if attendance is low, we're laying people off. He didn't say anything like that. In fact, the only mention of labor at all was from McCarthy, who said that they had previously furloughed like 100,000 or more cast members, but that they were trying to bring back as many of those as possible. There was no Bob Iger. Now, I'm not sure if we were or should have expected Iger to be there, considering Chapek is now really the CEO of the company. But still, he's been in front of these announcements for years now, and suddenly he's not there. So that was just worth noting. There was no mention of when Disneyland might reopen. It's the last of the parks, of the Disney parks, to still be closed. Hong Kong, I guess, but it had reopened once before. I'm pretty sure I didn't even hear the word Disneyland during the entire call. And then finally, and this is interesting, Disney stock is up. If you were wondering if this news was either good news or bad news, if you weren't sure, you can just turn to the stock market to find out. On Tuesday, the day before this call, Disney was trading at 117. Today is trading at 128, which is a significant increase in just 2 days. This is due, I think, to the Disney Plus news, which was good news, but it's also due, I think, to the not so ominous information coming out of Disney World and Disney parks in general. Disney appears to be in a decent position to at least weather this storm. They showed cash on hand of $23 billion. Now that is likely due to a number of loans that they have taken out since the parks closed. But that $23 billion does allow them to pay the bills for probably another year. And that's with things as they are. Whatever it is that they're going through right now, if this continues, if what we're experiencing now continues, they can probably last another year. But I mean, it does seem like things might be trending in a more positive direction. And that's where we wrap. Better than expected. It's not great news. They're not crushing it, but the fears of them, filing for bankruptcy in the next few months are certainly unfounded. That is not what's happening right now. But we'd love to hear from you on this. What are you feeling right now? Does this make you feel any better or worse than it did the day before? Do you agree or disagree with Disney's decision to put Mulan and Black Widow up on Disney Plus initially for $30? Or are you sorry that you didn't buy Disney stock 2 days ago at 117? Let us know in the comments below, and until next time, please be sure to like this video, share it with your friends, and subscribe to our channel. Please do also subscribe to our sister channel, Fresh Baked Presents. If you like more of this discussion, news and opinion about what's happening with current events around the Disney and other theme parks for that matter, check us out. We do live streams 3 times a week on Fresh Baked Presents. There are links below and on the main channel page. Otherwise, please keep wearing those masks. Please keep being kind to one another. And please know that we love you. And we'll see you next time. Fresh Baked.